All right, let's jump over to the market review. And I will go to SMH first because I talked about this pre-market. This is where we were pre-market, right at resistance. And I said, hey, if SMH isn't going anywhere, neither is the market. And as you can see, they've tried a little bit with the Mag 7. They've tried a little bit with the Dow to hold the market. But this was the biggest tell of the day. This and just being there, we couldn't get this is a monster tell. And that's what I'm saying. Hey, if we can't get through this level, there's no reason to worry about the market running away. Do I think it's going to flush today? No. Do I think it's going to flush soon? Who knows? But this is what I do know for sure. If we get above 1603 on my monthly pivot for the VIX, I'll be paying a lot more attention to that idea. The ES tried to get back to its R1, couldn't do it, having issues there. Okay, so as long as we're below that, you know the rule. This is resistance until proven otherwise. Okay, it was support. Once we got above it, once it breaks, it's resistance. Do I expect it to kind of snake around up here for a while? I do, just because I think that they're going to try to hold this baby. But a lot of the times, a lot of people think that, so they'll do the opposite. They'll either drop it first or they'll rip it higher. So just play level to level and don't get caught up in that mess. A lot of people are calling for a dip. Very possible. VIX is low, look out below, right? So pay attention to those ideas. NVIDIA was another one, I think, pre-market that was close to its R1. Let me look. Yeah, it was here pre-market, right into the R1. Like I said, very simple. We get above its support, right? So if I'm long NVIDIA, this is my level, 222.18. Once it breaks, that's no longer my level. That's now its resistance until proven otherwise. It gets back on top and holds, then it's support. And it's you take very small losses playing that way. And that's what the name of the game is. It's not how big you win. It's how small you lose versus how big you win. So when you can hold because you have great levels, like from the pivot here on the monthly on NVIDIA, and you say, hey, this is my bull bear line at 197. And you hold the first target at 222, that's a huge win. When you say, I'm going to continue to ride unless we break that level at 222, we break the level, you get out, that's a $2 or $3 loss. That's how the metrics work. And once you get very comfortable with these, you'll understand that that's the way to use them. I have had a lot of questions about where to find my indicator. It is pinned on my homepage. It's supposed to be. And I've kind of looked at it and it shows it in one way that it's pinned up there and then another way it doesn't. If you have issues, message me directly in Substack and I'll get that. We'll talk about it and I will set you up and take care of all that action. As long as you have TOS, Thinkorswim. That's all I use Thinkorswim for is trading. So SMH was a big tell today. The NQ, like I said, it's not going anywhere unless SMH goes, and DRAM, which DRAM's having an off day too. The MAGs are having an okay day. And when I say okay, let me show you. Mag 7 up 1.21%. Used to, that's all that mattered in the entire world. Sitting on top of the monthly pivot, little arch up, red candles. Pay attention, red candles. Do we come back down and break pivot? If they all move down together or all move up together, we'll get somewhere. Other than that, we're going to be stuck in Groundhog's Day. Like I keep saying, if you ever seen the movie where it's the same thing every day over and over and over, I was pretty young when I watched it, but I do remember it. Let me see. Those are your biggest. That's really what matters to this market right now. I know that like Tesla's having a good day. I've seen something that was going on with them earlier, jumped up on R1, trying to hold support. Good pivot play here, left the pivot, never really came back to it and just kept going all the way up. So 310 to 346, you're at first target. Pay attention to that. You are sitting on first target. If you break that, get out. Like just don't fight that action. You can always get back in. The SPX, since we're going to be doing a lot of day trades there for daily income, as far as just put credit spreads, call credit spreads, maybe some condors. We'll see how that fits into the equation. And don't let that scare you, that talk. Everybody's like, oh my goodness, what are you talking about? Well, it's very simple. All that stuff's very simple. And we'll get through that. ran right into R1. So same deal as pretty much the ES. Like this is just a proxy of the ES, right? SPX, SPY, XSP. That's all the S&P 500, just different ways to trade it. And the cash session is the levels are a shade different. So you can see we ran right into that and can't do anything with it. Same thing for the Q, the NQ. As you can see, we have broken this R1 and we're trading right below it. I know that the R1 on the NQ is at 885 just because I watch it so close. But now we are trading below this R1 on the QQQ, hanging like a bat. Not a great look. We'll see where it goes. It could go up, it could go down, but that's your bull bear line if you're a QQQ trader, 718.67. And like I said, on the NQ, I know that we've been playing with this weekly level over here at 557.15. We had that big arch up this morning, a dip, and then it was resistance here. So choppy, chop fest, right? Very choppy. Got to identify that when it is. What's not choppy is once we broke 885, we left. First target, 28,565. Okay. You could call the 29,089 on the weekly your first target as well. But the weekend's in a couple days. So just keep that in mind. We'll have new weekly targets next week. Once that, like I always said, used to, I was never, I'm trying to make this load. It's so slow, too much running. I think I've about burnt this computer up from computing data. Once used to, when we'd break this level, I wouldn't even consider being bullish until we got back above the weekly pivot on whatever I was looking at. Oh, sorry. Then I developed these lower targets, and that gave me a real edge in the percentages behind them. And now we're getting even better with knowing touches versus what happens after they touch those targets. So not only do we know what percentage we close above these targets, but now we know what percentage we close where based on when we touch a target. Okay. That's a huge, huge deal, a big help. But as you can see, broke weekly pivot, we've been heading south. Last week, let me give you that. Let's just look at it because they're just simple, right? We love simple. Where's last week? Here. Broke weekly pivot, touched that 618 that I'm bringing back probably tomorrow and bounced. Okay. Got back on pivot. You're bullish. Bearish below till we hit a target. And like I said, that new 618 and 382 are going to be between these. And that would have been a perfect bounce area right there for that. Break the pivot. Don't just try to buy it just because. Make sure we hit a target first. Like, well, it's went down enough. That's not a good answer. It's down too much. Not a good answer. Because I used to answer that way. Like, it's went down way too much. It's going to keep going down. Don't answer that way. Broke pivot. First target. That's 600 points. Okay. Second target. About another 500 points away. So right now, 577.15, bull bear line on the Q. As far as for the rest of the week, we stay below that. You've got to look at 29,000 area basically. If we get back above it, we can work our way back up towards the pivot. Being below the monthly R1 is something you pay attention to because A, we are below it, so it's resistance till proven otherwise, and B, its first target, and we have a little bit of time left in the month, is 28,565. So if you're swinging this short, as long as you don't get back above 29,885, you're in good shape. You look down here. That's just the rules of the pivot. That's no Dave thinks the market's going to go down. Dave thinks the market's going to go up. That's none of that. None of that at all. Because what I figured out, you don't want to think about the market. What you want to do is react. So whatever it does, you react to it. You got to have great levels to do that. And then that's how you make money. We break the level, you short it. As long as it stays below it, first target. Okay. Scalp on the way down. If you have multiple contracts, multiple puts, however you're doing it, take profit on the way down. Very simple. First target for the monthly. Like I said, we have a little bit of time left in the month. And I'm going to have to go do something. I've been computing data so much that my brain is fried. Okay. Fried. So I'm going to have to go to the gym is what I'm going to have to do here in just a little bit and get that out of my body. Also, Mags, DRAM. We'll look at DRAM. I don't populate levels on DRAM because I don't have enough data on a look back to populate for DRAM. It'll give me a pivot, but that's going to be all. DRAM is only down 3/4 of a point today, percentage wise. So not having a horrible day. Started off good here. I'm sorry, I'm making you yawn. Started off here and now we are back. Okay, had the pop. Now we're having the flop. Not really a flop, just kind of chop. We're chopping, chop, chop, chop. But I'd pay attention. This VIX, all eyes on this instrument right now. Because like I said, when it gets this low, it doesn't have a lot of room to go down. It can go lower. Yes, it's been lower. And they can hold it down here longer than you believe they can. All that is true. Just don't fight the fact of taking a bunch of new longs right here, thinking that we could potentially escape ever having another volatility spike. Maybe we do, maybe we don't. If you do want to be very long this market on a swing basis, say you're swinging for next month's expiration, whatever you're doing, use the levels and understand your risk management and you will be fine. Deploy capital when it's optimal, not when you want to. If that makes sense. We looked at NVIDIA. Let's look at MU. Having a rough day, broke below R1. So when you start looking, there's a bunch of things that kind of line up, right? MU below R1, NQ below R1. AMD, let's look at it. Come on. Below R1, perfect target too, by the way, 524 to 461, sitting on pivot. Bull bear line, 461.79. That's a big spot for that. SMH. No, I'm not trading you. I don't even use this to trade. Like I said, only chart. Sitting below R1. Okay. A lot of things are below some resistance. Okay. So that's what you watch. Targets are below, resistance up above. This is no man's land. Like I said, my 618382, we're having a little glitch. I got that ironed out. I will be adding that back on because we're probably sitting right about that level right here. Also, that first hour trade that I'm talking about will become a staple of what we do every day. Watching the SPX to QQQ for a flush, for a move that meets our metrics, and then we can sell premium against it and know our win rate and our loss rate in over 100 trades. It's very, very profitable. So especially, I mean, just a one lot's very profitable. But then if you start scaling into 5 lot, 10 lot, whatever you like to do, whatever your risk management and tolerance is, then that goes exponential in a hurry. So I have computed all that. I have all of that. We will use that to our advantage every day, because really what takes you from taking the QQQ and saying, okay, because I have that data right now, I know that after the first hour close is below the pivot. We usually don't 77% of the time, 74%, 74.1%, we stay below the pivot on a closing basis for the day. Understand that. That is a very, very important message that I can give you. Same for the SPX. 1 hour on the QQQ, it closed above the pivot. We stay above it 77% of the time. So that is very important to what we do and how we understand this market and how we can try to make some money. That screen does not switch when I show you that. I did not know that. I'm sorry. I will have to change the way that's recording. That's what I did earlier, and I botched that again. So sorry about that. Anyway, as I was explaining, and I explained in the beginning, that is what we are doing here. Watching these major levels, knowing that we are below them, so they will be resistance until proven otherwise. Watching the VIX because it's been down here being comfortable for a minute, and it's at lows. And isn't it amazing how the market just shrugs everything off that it wants? It will not matter. This is what I've learned in the market. If you learn one thing from today, it will not matter any of it. Wars, oil, the yen intervention, the bond buying that we're doing now. I just seen a note on that today that Treasury is going to start doubling its bond buys because nobody else trying to keep the rate down and nobody's wanting to mess with that stuff. So, right, like the world has a lot of issues economically. It'll matter when they want it to, but not until then. Keep that in mind. That is the whole thesis. And then when it breaks, they'll blame those things in some way, shape, or form. Politicians never take a blame. It's never their fault. It was something else. Gosh, don't you know? It wasn't their legislation. It wasn't their ideas. It wasn't anything to do with any of that. Doesn't matter what party's in control. It's never, hey, nothing we done. Keep that in mind. It'll be something else broke and it's whatever's fault. And now the market has had an issue. That's where we use our levels. And that's when we really get great opportunities. This chop is fine if you sell premium, but if you're not, then it's not as fun. This heating oil, diesel, gosh, sorry. $4.52, let's call it. You're paying right at $5 at the pump. Remember, the country runs on diesel fuel. I know that the majority of us have gasoline vehicles or some have electric. Diesel fuel transports all of our food, transports everything, all of our goods, services, everything that we mess with comes on something powered by diesel, like 95% of it. So keep that in mind. It's up here. 453. When I zoom out, I'll show you what I'm talking about. We're clearing these highs from the prior month. And now we're sitting up here. I think the all-time high is 480 something on my chart anyway. USO. Remember, I brought you the trade, the 127.44, I believe, right? Their biggest trade ever taken on USO, $444 million since its inception. And here we are, right? We're getting there. So was that a buy or a sell? Time will tell. Oil, then we'll look at gold. Gold's been ripping around because it smells blood in the water. Oil, bounce off pivot. First target 86.60. We're not there yet. Gap fill somewhat here. We did fill it, but it filled it here. And then come right back to pivot and higher it goes. There's a lot of things that, you know, the oil reserve is the lowest since 1982. Like I said, there's always a way that we make it through. I don't know how. All these issues. I should just quit streaming. That's my brain right now. All these issues that we're facing, and it doesn't matter. Something will matter eventually. So keep that in mind. This looks like an inverse head and shoulders when I look at it. Left shoulder, head, right shoulder. Neckline-ish. So break would put it up over 94. If you do the measured move from the neck to the top. That's not things I do. I just play levels, but I do know that stuff. I've used it. That's why I know it. So yeah, oil is, there's a lot working against it, but for some reason, like I said, we went over there and took over Venezuela. Now that's coming into play right now when Iran's kind of going out of play. Coincidence? I guess so. We'll see. Keep an eye on it. Know your levels. If you want the indicator, let me know. I will set it up with you personally. We will get together on a call and I will take care of it. And that is my youngest. No, my 9-year-old is checking in because I've got to take him to a buddy's house. So with all that, I will end this and we will talk soon.